Hello dosto, so this is Deepak and with me is Sanjeev Gupta CPA, and those of you guys who don't know, we are doing our real estate webinar in a couple of months. It's free webinar, doesn't cost you anything. All you have to do is go to sanjeevcpa.com and just register. But obviously when it comes to real estate, the first thing that comes into our mind is LLCs, Limited Liability Companies or corporations, better said. So I want to talk to Sanjeevji a little bit about LLCs, so that way you guys kind of get an idea. I'm sure if you are already investing in real estate, chances are you probably already have one, and if you don't have one, why you should have one. So Sanjeevji, let's get started with. So there are a lot of different type of corporations, right? We got C corp, we got S corp, we got limited partnerships, and now we have this LLC. What's so special in generally about LLC?
So, like you rightly said, it's a limited liability company. LLC is a very flexible structure created by the state. So it's not something like a corporation with legal status. So it's created by the state. So you have to file with the Secretary of State for that state to register the LLC. And then once you form the LLC, then you have an operating agreement, which is an important area or documentation for operating the LLC. So it's a very flexible structure, like means you can have partners, you can decide which partner to take, partners in fact. If you want LLCs to become a partner, or S corporation to become partner, or C corporation to become partner, you can do that. So it's very flexible in that. Then you can also decide who is going to manage that LLC, who's going to managing partner. There can be limited partner, how much capital they can contribute, who's going to take the guaranteed payment, who's going to take the distribution based on special locations. There are special location rules where a partner can take the losses if he has a lot of income, but of course there are certain regulations with respect to that special location. We call it Section 754 election. So it's definitely a very flexible structure based on operating agreement among the members of the LLC, and then it can be also taxed as a C corporation. LLC can be taxed as a C corp for tax purposes. It can also be taxed as a S corporation for tax purposes, and it can be remaining as a LLC. So very, very flexible structure for LLC.
Now, Sanjeevji, you brought up a good point here about members. So there are single member LLCs and a multiple member LLCs. So, I mean, obviously, it's obvious that single member simply means you have one person operating the LLC, and then you have multiple member LLCs. And then you bring up another term, which is operating agreement. So talk a little bit about what is operating agreement and how should one structure that?
Yes. So again, it's a legal side, how to structure the buying, selling, exit policy inside the operating agreement. Who's going to be manager? How much payroll will be taken out? All these things will be based upon each partner's requirements and the settlement among the partners. But like I said, a single member LLC is an LLC where you have one partner, one person running it. It can be husband, wife, one person. Now, from the IRS tax point of view, single member LLC has no separate legal entities. It's disregarded entity. It means if it's a single member, it's treated as a Schedule C, sole proprietor with a limited liability protection. And if you have more than one member, it becomes a multi-member. Then you become, like I said, it can be a partnership, 1065. LLC taxed as LLC, or LLC can be taxed as C corporation, LLC can be taxed as S corporation now. So you can
now once again, Sanjeev, you said if it's a husband and wife, because most people are probably operating an LLC like that way, it is basically just as a sole proprietor with a limited protection. And it just all the income goes on Schedule C basically, right? Just like LLC. A regular business.
Yes. Okay. Single member LLC. But if you are registering in the LLC, single member LLC in California, of course, like I said, the LLC has to be registered with the Secretary of State. So when you register LLC, they need $800 franchise tax here in California. So we file a form, California 568, for filing that LLC return for California. So where a single member, multi-member, they collect their $800 based on that form. Plus they also collect LLC fees, which is based on the gross revenue.
Right, but my main question here, Sanjeevji, was if somebody wants to set up an LLC, let's say they bought a property and they want to put that property under LLC. So when they're registering, they register as a single member if it's just husband and wife, or multi-member, because
Well,
technically there are two members, right? Husband and
yeah,
wife.
it can be either way.
Either way is fine.
It can be either way. You have to determine based on the facts and circumstances of each case what's good. So that's why consultation with your tax professional becomes very important.
Yeah, and the reason why I bring that up is because if it's husband and wife, they probably don't need a specified operating agreement in this case.
Yeah, but again, divorce settlement happens and all these issues happens, and so again, it all depends upon facts and circumstances of the case, which is better, which is not good. Again, it also depends upon which state you are in. For example, if you're in California, it's a community property state. If you're in Texas, it's a different separate property state. Texas is a community property state, but if you're in inner states like Alabama or Arkansas, is more like a separate property state. So it depends upon those relationships too.
All right. So Sanjeev ji already talked about operating agreements. He already talked about single member LLC versus multi-member LLC. Let's talk about the protection point of view. What kind of protection somebody gets from an LLC?
The thing with the LLC is, like I said, LLC is not a corporate structure. It's a flexible structure registered, which is created by the Secretary by the state subject. So now, when you talk about protection, it is provided limited liability protection. Means if somebody gets sued from outside, the vendors can sue, the person can, any other person, third party can sue any member of the LLC. So they are protected. The protection is there to the extent of the investment in the LLC. Now, if they are not maintaining proper record keeping for LLC, they are just treating the LLC as a piggy bank. They are taking money out. They're doing all the expenses, not doing proper structure like as per the agreement, not following that the operating agreement in totality about the expense and income, and not properly classifying them. So what happens in that case, if you get sued, if the LLC gets sued by a third party, the liability protection goes away, because you go in the court will say you are not running business as a business, as a LLC. So it's very important that when you don't think that LLC, just because you have an LLC, the protection comes into picture. No, you have to follow the in writing how the structure, means the method of organizing the LLC. You have, as per the operating agreement, don't book any personal expenses. Keep your books clear, file your return on time. In that case, definitely you're limited, your protection is there to the extent of your investment in the LLC.
All right, and here's another thing. So typically when you have a C Corp or S Corp, you're required to have minutes, right? So you do your board meetings, you do your advisory meeting, and you write down basically what decisions were made in that particular meeting. And that's a critical requirement if you want to hold your corporations, let's just say, in an active status. Nobody really checks up on you. You don't have to register, go those minutes anywhere. But if you don't have one and you did get sued, then like Sanjeevji said, that could be a disregarded entity. Now, question to you, Sanjeevji, is if somebody had an LLC, do they need to keep the minutes as well?
Yes, it's nothing wrong in keeping minute. Maybe just not like a corporate structure where you have to keep board meetings, the minutes, and shareholder minutes meeting. Here you can do a annual meeting of the LLC members. You can hire your kids and they can be a part of the LLC if they do some and have proper documentation of the work they're doing. If you do it that way, you can do annual meeting and go to a vacation, do annual meeting in Hawaii or wherever you want. But do that meeting every year, because that really helps you in getting those expenses properly for tax purposes, properly classified for tax purposes. So
now the reason why we're bringing it up, because a lot of people set up LLCs and corporations, but then they do not do their meeting minutes, and even if they do it, they don't keep a record of it.
Again, it's the issue of the CPS tax professional, I will say. So just because they don't teach their clients. The client, of course, they don't know a lot of things. So the professionals have to be very clear that you have to maintain that status, then you have to follow the structure properly.
Now, as far as taxation on LLC is concerned, you talked about that you can choose to get it taxed as S corporation, you can choose to get it taxed as C corporation, or you can just leave it at the LLC, correct?
Yes, it can be, it's a flexible structure, it can be taxed either way you want, so nothing to worry about that one. So LLC, it can be as an LLC with one general partner managing that LLC affairs, and others being limited partners. It can be LLC taxed as a C corporation, where all the benefits or all the rules and regulation applies as a C corp. Of course, it provides a double protection because you're registered with the Secretary of State as LLC, but running as a business as a C corp, and the best possible I will say election is LLC tax as a S corporation, because you can avoid the self-employment taxes which is there in LLC, because when you make money inside the LLC and there's net profit there, you have subject to self-employment tax in addition to income tax. So if you convert it to S corporation, so you save self-employment taxes on net profit, you are just subject to income taxes on net profit. So that's, of course, it's again depends upon facts and circumstances. There is no borderline. You have to depends upon you talk to your CPA tax professional and make sure that you do the right elections.
And just to clarify what Sanjeevji said, what he's really saying essentially is, if you have some sort of income that you're drawing from an LLC, probably in your best interest to go with an S corporation. If there's no income, it's just an asset that is sitting, then perhaps just leave it in an LLC. Am I correct?
Right. So, for example, LLC mostly used in terms of real estate. We don't recommend LLC for operation of a business, for example, restaurants or hotels, or hotels include real estate, so not hotels, I would say gas stations, any retail stores, any IT services. We don't recommend LLCs. We recommend S corporation. Now, in particular professional area like doctors, attorneys, CPAs, California has clearly mentioned that you cannot do LLC for those professions which require licensing. You have to do S corporation. So that's also one has to take into account.
Now, as far as the taxes is concerned, right, is there a fees to maintain an LLC in the state of California?
When you say fees, is it statutory fees or a CPA?
Yes, the state fees.
The state fees is always, like I said, you have to file with the Secretary of State every once in 2 years. You have to update your statement of information. If you don't update your statement of information, then you're subject to a penalty of $250 and subject to risk of getting deregistered or cancelled out. So that's once every 2 years with the Secretary of State. And after that, of course, the California franchise tax, which is just talked about, $800. First year is exempt. Subsequent years you have to pay $800. Plus, you will be paying LLC fees based on the gross revenue. Start from $250,000 and up. Gross revenue, the fees can be from $900 and can go up to $11,000.
Yeah, but to get there, you got to have a substantial amount of income coming out of LLC. Maybe you own like a rental property or something. But in those kind of cases, more than likely, Sanjeev will probably recommend you to treat it as an S corp anyway. Right. So anyhow, as you can see, it gets a little bit more complicated. We wanted to kind of give you an idea as to what kind of potential problems that you possibly can run into. So it's always a good idea to set up a personal consultation and get those questions answered, just to make sure, A, you're setting up the right entity in the first place. Number two, are you getting proper protection that you think you are getting? That's a very important aspect. Number three, will this particular structure will give me the best tax treatment possible? So all of those things. And we're going to talk about all of these things in great detail on our real estate webinar. So please do join us. It's free, doesn't cost you anything. Just go to sanjeevcpa.com and register for that webinar. Thank you so much, Sanjeevji, for explaining what LLC is, because I think it's such a common name. People understand it. But as you clearly mentioned, there are so many, let's say, so many red lights that you might cross over, right? And each time you cross over that red light, it can penalize you if you don't. So you got to, kind of navigate your way through and avoid all the taxes and penalties, and obviously take advantage of it.
Like I said, if you choose a wrong structure, you end up paying more taxes. So it's very important. Just forming LLC is not the only way out. You have to really look into it, whether which classification you need, and whether to keep that same entity, and who are the limited members, who are the general partners. Operating agreement has to be in place, and the tax rules for that state also plays a big role in choosing the right LLCs.
So there you go, guys. Thank you so much for watching us, and I'll look forward to seeing you on that free webinar. Thank you, Sanjeevji.
Thank you.